Welcome back, cool cats. It's been a crazy week, and between the Trump and Elon feud, CPI and PPI this Wednesday and Thursday, and markets within a stone's throw of all-time highs, we're set to have another volatile week ahead. If you're new to the channel, I primarily do technical analysis on a ton of tickers, including SPY, QQQ, IWM, Bitcoin, commodities, and more, and I always respond to your comments, so if you love markets and cats, you're in the right place. Nothing I say is financial advice, these are just my thoughts, opinions, and cats. So we're going to kick things off with SPY. I shared on StockTwits X and the YouTube community tab this descending resistance line that goes back to the previous all-time high and how we broke above it and where it was likely to act as support. As you can see, I shared this on June 5th before we had that pullback. And we zoom in on the 4-hour time frame, you can see how we got this pullback to this line, just briefly pierced below it. When you look on Moomoo, it actually hit it perfectly and bounced off of that. So if you're not following me on at least one of these platforms, you could be missing out on these market moving insights. So I want to go over just the technicals and then I'll throw up my indicator so we can see any additional confluence. So this symmetrical triangle here in purple that I've been sharing for weeks, its target on SPY was roughly about 602, and you can see we're just about ready to touch that. If instead this big bullish megaphone pattern is what's in play, then it could potentially be targeting essentially this previous main red resistance line that we've covered so many times before. And what's interesting about that is if we zoom back in with this ascending triangle pattern that I shared on my last video, we can see that if this were to break to the downside, it basically could be targeting this very strong trend line here. This is a multi-year trend line, so it's very significant. But this upper red resistance line is also multi-year, so very, very significant. So if it were to break to the downside, it would have to break back below this descending resistance line from that all-time high. So it would have to break around 591, 592, and it could bring it as low as roughly about 576 to 577. If, however, it breaks to the upside, and I'm not going to lie, the market seems pretty bullish right now, that could be targeting essentially this previous very strong resistance line around 625, possibly even up to about 630, depending on where it hits, which would obviously be breaking the previous all-time high. And I could see this even being a situation when we break previous all-time high, we pull in all of the bulls, shatter the hopes of all the bears, and then we potentially get a rug pull. And that's not to say we're going to have another 20 or 30% correction, but this red resistance line is so significant that every single time it's been hit, it has led to major sell-offs. And if we zoom out on the daily with our indicators thrown up, we can see that the baseline of Ichimoku is actually lining up perfectly with the 200-day simple moving average at around 578. So if the market came down there, that could be an amazing buying opportunity. And I think if you didn't buy calls there, you'd really regret it. But, and I would just want to throw up just the RSI here, it has a pretty glaring bearish divergence on the daily time frame. From this high to this high is definitely downward sloping, whereas here we've made just a slightly higher high. So this isn't to say that the market can't push higher, but it means that it's more and more likely to roll over, grab more liquidity before it could push higher. And yes, it actually could mean that the market is about to roll over if we see something like a double top. Hopping over to QQQ, if you don't know this already, you have to follow both QQQ and SPY. SPY is so tech heavy, but QQQ is even more tech heavy. And key levels on both of them can react and cause both of them to move in one direction or the other. So if you aren't aware, this resistance line right here is actually the previous support line of this major bullish channel that goes back all the way to the July of 2023, as I've covered many times before. And QQQ keeps rejecting off of it every time it gets close or even touches it. However, every time it touches it and bounces down, it's not rejecting as sharply, which again shows a lot of bullishness, and it indicates that a lot of these big block orders that are in here are getting bought up, and this key level could get broken, as well as this main exuberance line that I've covered in many previous videos. So if QQQ can break this roughly 533 to 534 level, it could definitely be headed back to all-time highs and potentially even break this previous all-time high of around 541.28. And if I zoom back out to the daily, again, pay very close attention to this very bullish channel. If we were to break back up into it, that could indicate that potentially QQQ could head as high as about 640 plus if it could get through all of these major resistance lines. But that's a big, big if. And one thing I find very interesting as well, and this is something I covered last year, is this big symmetrical triangle pattern. Initially, its pattern target was around 548 to 550. And I have to wonder if it's still trying to play out. Is it a possibility that these Trump tariffs, all of these announcements were really just kind of a black swan event and the market is trying to get back to that pattern target? And I know it sounds probably insane to think that an old target like that could still get hit, but the markets love to fulfill their targets and they hate gaps. But just like on SPY, on QQQ, we have a very, very obvious bearish divergence on the daily time frame here, where price on the chart is making slightly higher highs, but the RSI is making very noticeably lower highs. And this doesn't tell us exactly when it's going to happen, but it does tell us that QQQ and SPY are getting ready to roll over. And what really matters is when it rolls over, will it be met with bullish demand, or have we just hit a double top? And throwing up our indicators, similarly, if QQQ were to come back down, it could retest this previous descending resistance line from all-time highs somewhere around 520. And the next area of strong support would be around 505 to 506. If, however, it can break back into this bullish channel and get above this 533 to 534 level, its next major resistance would be around 539 to 540. Hopping over to IWM, similar to SPY and QQQ, I've identified some very key trend lines for IWM, and as we get closer to those, I'll definitely be including them in my video so that you know where price is likely to reject from. So as I've been sharing, IWM small caps has been lagging SPY and QQQ. However, if this big bullish megaphone pattern is still in play, we can see that right now it is targeting roughly about 225 to 226, which is right below this supply zone. And we can also see that every time that we've touched this key level of around 211.50 to 212, which is also a supply zone as long as you're below this whole area here, we've rejected or we've consolidated sideways, but we keep pushing up, and you can see this very clear trend line right here. Now, if we take this key level here and we add it to this trend line, this upward sloping trend line right now, we essentially get an ascending triangle whose pattern target would also be targeting basically the same level as that big bullish megaphone. So I think there's a lot of reasons to potentially be bullish on IWM for it to at least go up to this 225 to 226 level. Zooming out on the daily, on the flip side of everything that I just said, like I've been saying, I could see a scenario where we finally break above this supply zone, but then we hit the 200-day simple moving average, which has yet to be retested on IWM. And I could see a scenario where we do have some bearish divergence here, and it pulls back, potentially even hitting this trend line somewhere between around 209 to 210, 211. It depends on where it would get hit, and then potentially could grab enough liquidity to continue pushing up higher. So if you're going to grab calls, in my opinion, it would be smart to grab longer dated calls and potentially even hedge with a shorter dated put. Of course, not financial advice, but that's one way to potentially play this. Hopping over to Bitcoin on the weekly time frame, there's some things I want to point out. Obviously, from here to here on the RSI, we had a bearish divergence, which has already played out right in this section here. And that got followed up by a hidden bullish divergence, where the RSI made an equal low, whereas price made a higher low. And that almost always leads to another push up, followed by a pretty deep correction. So when I zoom in on the daily, what this indicates to me is that Bitcoin could potentially come back and retest this roughly 96,000 level, which is the top part of demand here. And there's a potential it could come as low as around 89 to 90,000, which is the lower area of demand. Now, of course, if I zoom back out again on the weekly time frame, there is this bullish channel here where the lower support line started right here back in December of 2017, around that 20,000 mark, and it marks these upper peaks here as well as the lower peaks. So it seems to be very significant. And right now, it does appear to be treating that as support. So if you missed my previous video, essentially right now, Bitcoin is stuck in two different bullish channels. There's this wider bullish channel here in purple, but then there's a longer running channel as well here in orange. So anywhere where these support and resistance lines intersect could be very significant. And I can say that this roughly 110,000 level is acting as very strong supply. So if we can break above that, we could see Bitcoin coming up and trying to hit at least this 138 to 140,000 level. But if it loses this bullishness, it could come back down and retest roughly around 80,000, which is the intersection of both of these support lines. And this could be an amazing buying opportunity if you're looking to go long Bitcoin. Hopping over to TLT. All in all, I'm still pretty bearish on TLT. However, this falling wedge right here makes me at least short-term bullish on it. If you missed the last video, what I shared is that this potentially, if we drag this down to where this looks like it's going to hit this previous resistance line, if it hits this previous resistance line around 85 even, retests it and confirms it as support, which also this whole area between about 84.75 up to about 85.50 is a demand zone. If this acts as support, it could potentially be targeting this previous support line of this very long running channel, which I've shared in many videos before. And alternatively, if this doesn't act as support and this instead it breaks down, we could see TLT be targeting around 73.50, which is not the best situation for the bulls. And if I throw up my indicators on the 4-hour time frame, there is a lot of confluence for us to get a bounce here, not just off of this previous resistance line, but if we look right here, the Ichimoku cloud support is very thick in this roughly 84, 85 to 85 level, right in that area. At the same time that when we look at the RSI, we can see how it's stair-stepping up. It was lower here, it's higher here, and we're potentially about to make a double bottom on the RSI. So I'm honestly hopeful that this will be bullish and it'll push back up at least in the short term. Hopping over to SLV on the 4-hour time frame, I was pleasantly surprised with the breakout. I shared in my last video that we had a symmetrical triangle pattern target, and I gave what the targets were, but we definitely far exceeded that and broke the supply zone between around 31 up to around 31.50. And this 31.50 level is a very key level as well. As you can see, we peaked above it, broke back down below, and then broke back above it again. And I think what this goes to show is not just that symmetrical triangle patterns, which are consolidation patterns, not just that they can break out, but that the longer they consolidate, the more aggressive the breakout's going to be. Now, one thing I want to point out is the potential for this to be forming essentially a mini channel right now, which precious metals tend to do. But even inside of this channel, there's the potential for this to be forming a mini rising wedge, which of course is a short-term bearish pattern, which could just bring it right back down to this support line and continue it higher. And I'm going to zoom all the way out on the weekly time frame just so that you can see this, but you can see this is a multi-year bullish channel here in orange, and we're already near the upper bounds, near this key level of roughly 34.25. And I could absolutely see it coming up and tagging that level, maybe even tagging the upper resistance line around 34.75 to 35, depending on where it got hit. Maybe even pierce above a little bit, but it's very likely to reject from that area. And again, if you're a long-term holder, that's probably not really going to matter to you, because as long as this bullish channel remains intact, eventually the target is over $60 per share. But for anybody who's looking for an opportunity to load up more, I think there's definitely the potential that at some point SLV could come back down and retest at least around $26 a share and possibly even the lower support line of this channel, which would be around $25 a share. And that could be a great opportunity to load up. And if you're just looking for a daily support level, this roughly $29 up to about $29.50 per share could be an excellent daily buying level. And it would take a lot of bearish pressure to break below that level. I shared in my last video that GLD appears to be forming this very big symmetrical triangle. And on June 5th, we briefly pierced above it, but it looks like it's rejected off of there. And as I always say, symmetrical triangles are notorious for false breakouts. So I have to wonder, is this a false breakout? Or were the bulls just a little bit early and needed to grab a little bit more liquidity, possibly in this 300 to 302 area, and then continue higher? Or is GLD about to break this key level here around 299 to 300 and head back down? There's been a lot of fear in these markets lately, which has forced gold above this very bullish channel that goes all the way back to April of 2024. But I have to question, if fears start to subside and people start seeing that gold may not be the best place to place their money, will it head back down? I think we're going to know within the next couple of weeks whether or not GLD is about to break out to the upside or to the downside. And as I shared before, this pattern is targeting a move up or down of roughly 45 points for GLD. So you need to be aware that it absolutely could go to new all-time highs, but it also could break back down, forcing it into this channel and then potentially even below this channel. It would be targeting this very, very strong level of around 258 if it broke to the downside. And keep in mind, this pattern took many weeks to form, so it could take many weeks to play out. We're continuing to monitor this massive multi-year descending triangle on crude oil futures. Right here, this is potentially a false breakdown of crude oil futures, with the potential for this to be a big inverted head and shoulders pattern targeting roughly about 7370 back to the upside. But as I've said before, in order to invalidate this much larger pattern here, it would not only have to break above this, but it would have to come back and retest this previous resistance line around 71 even and confirm it as support before it could continue higher. Otherwise, crude oil futures are headed much lower. Hopping over to Dixie, the dollar strength index on the 4-hour time frame, we can see that it is definitely wedging between this previous upper resistance line of this old descending bearish channel, and then it's also wedging between this extended neckline of this previous inverted head and shoulders pattern here. And I've got to say, in conjunction with the RSI, we have pretty obvious bullish divergence here on the RSI, where this has made higher lows, whereas price has made essentially equal lows. This is followed by a hidden bearish divergence, where the RSI makes a higher high, but price makes an equal high. This indicates that the bulls are getting pretty tired, but that the bulls are still very strong. So I would anticipate at least a pullback on Dixie before it potentially breaks out of this massive falling wedge pattern here. And if we take a measured move from essentially where it began to consolidate here, we can see that essentially Dixie could be targeting somewhere upwards of around 102 even, or it could also be targeting roughly around 96 even, which would have it breaking these very strong trend lines. And if I zoom out on the weekly, that would be this line here in green and this line here in yellow, which are extremely significant. I don't care who you are, you don't want these support lines to get broken. With the exception of silver and gold bugs. If you want precious metals to go up in value, then you definitely want the dollar to fall off a cliff, and that's exactly what would begin to happen if these supports got broken. But again, if I throw up the indicators on the daily time frame, we can see that the RSI is definitely showing a lot of bullishness even on the daily time frame. And if this were to break out to the upside, it would break above the 10-day, the 21-day simple moving averages, the baseline of Ichimoku, and the 50-day simple moving averages. And it would be placing it at the upper bounds of this supply zone that goes up to about 102 even, into strong resistance on the daily Ichimoku cloud, at which point I would expect it to pull back sharply. And as I've been saying, the market fell off with the dollar and the market has been rising as the dollar's tried to push back up as well. So if Dixie pushes up, will we see the market push up with it? Or will it resume this previous relationship, which is usually an inverse relationship where the dollar goes up and the market goes down? I'd love to hear your thoughts on that in the comments below. Hopping over to the VIX on a 4-hour time frame, just like SPY and QQQ are showing bearish divergence, the VIX is showing a bullish divergence on the RSI, and it's pretty obvious. If we look here, price is essentially trading sideways on the VIX, whereas the RSI is making this very obvious ascending support here. And as I keep saying, this roughly 15 to 1550 level is a very strong area of support on the VIX. So I think unless they do this thing where they keep gapping below support on the VIX, I think it's going to act as strong support. And there's the potential that VIX calls could pay out within the next week or so once that gets hit. And as I've said before, don't make the mistake that I made. Do not buy very long dated VIX calls. And the reason for that is because the longer duration of a contract that you buy, not only is it pricing in that something could go down, but it's also pricing in that it could go back up in that time frame. So if you bought longer dated VIX calls that were perhaps a few months out, even if the VIX spikes sharply, those contracts are barely going to move. Whereas if you bought ones that are just a few weeks out, they're going to move pretty quickly. And it's kind of the same principle as zero DTE or at least shorter dated options. There's less time for that contract to go back out of the money. Taking a quick look at investing.com's economic calendar, the most important events that we've got going on this week is obviously tonight, Japan's GDP numbers are coming out, which could affect their interest rate decision coming out the following week. Then on Wednesday, we've got the CPI numbers coming out, and Thursday, we've got PPI coming out. And considering the inflation narrative that's very prevalent right now in the markets, these numbers could definitely move the markets. Then quickly taking a look at Moomoo's earnings calendar, there's not a whole lot in the way of earnings this week, but on Tuesday we have GameStop after the bell, which I'm sure all of the GameStop apes have been looking forward to. On Wednesday we've got Oracle after the bell, as well as Chewy before the bell. Then on Thursday, there's Adobe after the bell, and I'm honestly really not seeing much of anything else. Next week, Japan's interest rate decision will be out on Monday, plus the FOMC interest rate decision on Wednesday, followed by the options triple witching event on Friday, which only happens 4 times a year and can lead to immense volatility in the markets. I'll be doing some in-depth analysis next Sunday in prep for these events, so don't forget to subscribe and tap for notifications so you won't miss it. And again, I post throughout the week on StockTwits, X, and the YouTube community tab, and I'm very responsive to my community members. So if that sounds like something you're interested in, please make sure to subscribe. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.